So you want to learn a little bit more about taxes. Well, that's definitely a smart move. And one thing that you really need to know about when it comes to income taxes is the difference between a marginal tax rate and your effective tax rate. And that's exactly what we're going to talk about in this video. After watching this, you should know everything that you really realistically need to know when it comes to marginal versus effective tax rates. Let's first talk about marginal. So the marginal tax rate is really just, a fancy name for your tax bracket, what tax bracket you are in. Here in the United States, we have what's known as a progressive tax system, which basically means the more income that you make, the more that you're going to be taxed on a portion of that income. And that's where the marginal comes in. Marginal kind of meaning just portion. Let me go ahead and actually put something up on the screen for you. That is the marginal tax brackets. These tax brackets show what portion of your income is taxed at. So for example, if you look at the single tax bracket, which is the very first one, you can see that there are different tax rates right next to it, varying from 10% all the way up to 37%. So your taxable income is going to be what those figures are under the different filing statuses. So when it comes to single, if you have an overall taxable income of $100,000 and you are single, then you will fall into the marginal tax bracket of 24%. Now that doesn't mean that all of your income, all of that $100,000 of taxable income is taxed at 24%. It just means that a portion of it is taxed at that amount. So if you look at the actual numbers, once you get to $85,526, from that on up until your $100,000 in that case, that portion, about $15,000, is taxed at 24%. So that is the amount of money that is taxed at 24% for that case. And it's the same for all the different tax brackets. So once you reach a certain threshold of taxable income, which is different than your total income, all right? So you have total income and then you have deductions and things like that, and what's left is your taxable income. So once you have your taxable income, you plug those into those tax brackets. And whatever tax bracket you fall into is what's known as your marginal tax rate. So in that case, with the single person making $100,000 of taxable income, they fell into the 24% marginal tax bracket. So a portion of their income is taxed at 24%. And you can do the same thing when it comes to your income and your tax rate as well. You can see, what's the highest portion? Basically, the question you're asking is, what is the highest tax rate that I am paying on a portion of my income? Now, marginal tax bracket is definitely important, and marginal taxes are important to know. But really, the bottom line is they're not the most important thing. The effective tax rate is a lot more important than your marginal tax rate. And effective is another fancy word. It just really means actual tax rate. So effective equals actual. So your actual tax rate or your effective tax rate is how much you really pay in taxes as a percentage of your income. And it's almost never going to be exactly what those marginal tax brackets are. Because if we go back to the marginal tax bracket, I'll put them right up on the screen one more time. If you go back to those, you can see, like looking at the single again, from $0 to $9,875, you're going to be taxed at 10%. And then above $9,876, you're going to be taxed at 12%, and so on and so on. So you're going to take all of those different taxes at those different amounts, and you're going to figure out how much taxes you're going to actually pay on that amount. And then once you add up all the amount of taxes that are due, so your total tax bill, you divide your total tax bill by your total income, and not your taxable income, by your total income, and then that will find your effective tax rate. So the effective tax rate, in short, is the percentage of your income you really actually pay towards taxes, or federal income taxes in this case. And taxes is a really big component of what this channel is about on cash flow, what we are all about here. So I love talking about taxes. I love talking about saving money on taxes, saving money in general, investing, and just growing your net worth. If that sounds interesting to you, then I invite you to subscribe to the channel because I'm putting out new information on personal finance every single week. Currently, I'm planning on doing it on Tuesdays and Fridays at 3 p.m. Pacific Standard Time. While at the same time, if you are enjoying this video, please give it a like. It really helps me out and it motivates me to keep making videos to keep helping you out. So let's get back to it. Let's give an example real quick about marginal versus effective. So for this example, I'm going to go ahead and say that we have a couple that is married filing jointly. And let's say that they make, a pretty median income of $50,000 of taxable income. So after their actual gross income, less their deductions and adjustments, they have a taxable income of $50,000. But their actual tax bill ends up being $5,000 somehow. So I'm not going to go through every single scenario, but let's just say they actually paid $5,000 for their federal tax bill. Well, if we plug that $50,000 into the marginal tax rates, you'll see that they actually have a portion of their income taxed at 12%. But their actual tax bill, after everything else was said and done, was $5,000. So we divide that $5,000 by their $50,000 of total income, and we get a effective tax rate of 10%. So 10% is the actual amount of taxes that they paid relative to their total income, whereas a portion of their income was taxed at 12%. Now, this probably isn't accurate if you actually did all the math on it. That was just an example for example's sake. Someone in the 12% tax bracket, married filing jointly, usually they're actually going to pay much less of a total percentage of their income towards taxes, especially if they're smart about it. And saving money on taxes is one of the most important things that you can do in order to achieve financial independence and grow your wealth. And if you're watching this video, then I can already tell that you are interested in saving money on taxes and growing your net worth by doing so. So I invite you to watch this other video that I made. It should pop up right next to me just about now, and it is called How to Achieve Financial Independence in 10 Years or Less. I know in that video there's going to be a ton of information that is going to be beneficial to you for not only saving money on taxes, but also just saving money in general and investing in general and growing your net worth. So I highly recommend that you check that video out if you enjoyed watching this video. And if you could just do me a favor, if you haven't already, please like this video if you enjoyed the video, and consider subscribing to the channel because I'm putting out new information on personal finance every single week, and I just know that there's going to be something that I can help you with. Thank you so much for watching. I'm Zach from OnCashflow.com, and I hope to see you next time.